More reaction to this new Zynga direct gaming service ahead of the company's planned IPO. Greencrest Capital analyst Max Wolff joins us now from New York. Max, welcome to the program. Our last guest suggested that the IPO road is a little bit clearer now that they had this announcement out today. Would you agree with that?
Yeah, I think they pushed back. I think some of the headwinds to the IPO space have to do with disappointed investors who are in no mood for anything but good news. And the reality is that there's always something other than just good news in the marketplace, whether that's firm-specific issues around an earnings and growth miss, or just a general sense that some of the names in the space that made it to the public portion of the space first were a little bit less than accretive and exciting to portfolio managers and investors.
You know, Max, if people think this is a good move for Zynga to distance itself from Facebook, should they have been even more aggressive, even more distance, or more aggressive in that sense?
Well, the question is, they're kind of on a tight leash, especially because the last quarter was a little bit underwhelming, and that means that if they spend a lot of money building out a capability that isn't accretive and doesn't push revenue very quickly, they have a problem. That being said, they really did try today at least to kitchen sink us with everything they've been criticized for not having, whether that's mobile or some independence or an iPhone app or an iPad app or a future that isn't as codependent. And I do think dependent is unfair and codependent with Facebook is more fair. So we got kind of kitchen sinked here, and there are a lot of really exciting initiatives in there. The question is, of course, whether they can put them into place and start earning revenue off those initiatives sometime in the foreseeable future, because 1 or 2 quarters happens to even the best of companies, which this has largely been, but more than that starts to ask really serious questions of an existential nature to the management team and the vision going forward.
So Max, what about the IPO? I mean, this big product announcement right before, an IPO they filed for, they've amended for, it looks like it's imminent. What does this mean for the IPO?
Well, I think it means a little more excitement. It may be a pushback against what we would expect to be a slight valuation reduction based on the sort of, let's call them, enhanced voting rights that Mr. Pincus has sort of carved out for himself in the 70X space in terms of what people could look forward to in their managerial say who are going to enter the space in the post-IPO environment. That being said, I think the general context for IPOs remains difficult, if not closed, but a contracted window. And of course, all the various firms trying to come to market will be affected by that. I do think that,
But isn't this, when you look at Zynga, isn't this a different kind of business than, to lump these guys in with Groupon outside of the size of revenues, it seems like a very different business. Profitable, generating tons of free cash flow, conservative accounting, at least as it relates to bookings. It's a different animal, isn't it?
Absolutely different animal. It did sort of baby with the bathwater scenario here. People do group it with Groupon, unfortunately, and I don't think it deserves to be. I don't think the revenues look like that. I don't think the management looks like that. But the bottom line is, if they come out around the same time and you're loosely seen as in the same space, you might get tarred with a brush, just like in some extent they get a lift from being associated with Facebook, and so did some other names, whether or not they really earnestly, honestly always deserved it.
Max, great perspective as always. Max Wolff of Greencrest Capital Management joining us with the latest news out of Zynga from New York.